Media recognition from Bloomberg, Reuters, recycling trade publications. Patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Tim Cyclesman Wood, editor of Cycles News and Views on Cyclesman.com. Welcome back to the show, Tim.
Jim, thanks for having me.
The Fed has met up, and one of the headlines was low interest rates but growing inflation. Are they going to have to step in and up interest rates to slow this thing down, or is it going to slow down on its own?
Well, I think that's the message that they're trying to send. I think, specifically that the economy is in recovery mode and that, they've created the inflation, which is why they're talking about raising rates and that everything is just peachy. But, I see it differently. I think it is going to slow down on its own. I think that, like we talked about all along, everybody's been talking inflation. But I think that this inflation that we have seen, obviously with higher commodity prices, I've said, and I still believe that it has been in counter-trend cyclical advances that have been driven by shortages and not long-lasting real inflation, which I think is what the behavior with short-term rates has been telling us. They've been incredibly weak. And I think that's exactly the message that they're really sending there. I also think that one of the reasons they made the statement they made about raising rates down in the future and the so-called inflationary, like they kind of have accomplished their goal a little bit there, if you will, is that they wanted to try to put a floor under the short-term rates because short-term rates have been trying to drift lower. And I don't know if people are aware, and I'm not looking at the chart, but I can't remember if it was a 3-month or 6-month, but just recently it was all the way back down to its 2020 low, April or May or March, whatever it was, 2020 low, and trying to break. And so, while on the one hand they want low rates, they don't want them as low as they've been trying to go. So I think that was, again, part of the statement is to try to put a floor under the rates. And, my expectation has been that pretty much all asset classes would peak together, and I think things may be beginning to change in that way.
Now, commodities, lumber has corrected quite a bit. Are we going to see that happen with other things like copper?
Well, yes, that's my point. I think that, like I said, I think my expectation has been that these have been, to draw the picture, not to digress too far, but like I said, obviously we've been in cyclical advances. In my world, looking at it from cycles, we've been in cyclical advances, but I've said, yes, they've been great, but they're counter-trend. And again, I think all asset classes are going to peak together. I can't remember if it was lumber or Bitcoin. We talked about one or both. I think it was a month ago, a show before last. And I said it'd be kind of fun to start watching Bitcoin or lumber. Like I said, I don't remember which one it was, and look at it. And at the time, I was sniffing, the top there, starting to see a little something as far as structure. And before we could do the next show last, 2 weeks ago, it had already broken. And I run the numbers, as of just a little bit ago. Bitcoin's down 41% and lumber's down 43%. Like I said, I don't remember which one we talked about. It may have been both. But it happened. It's just, bada bing, bada boom, seemingly out of nowhere. And that's how I think that everything is going to set up and turn. But obviously it's a progression. I don't think people understand, that Bitcoin is down, lumber is down, but I don't think they understand that I think it's a turning taking place here. I think things are changing. The question is, can they somehow save it again? Can they hold it? How successful will those efforts be? But it's trying. I also think I see evidence that housing has maybe topped, potentially topped. There's good evidence there. And I think things are in the process of trying to change here.
Well, I noted that the high lumber prices had added $36,000 to the price of a new American home. And you know something? Once that home is built and you go to paint it, apparently there's a paint shortage caused by the Texas deep freeze. Some kind of distillate or whatever, a key component in paint, has become a shortage. So if you can find paint, you're going to be paying a load more money for it. Maybe just leave it unpainted for 6 or 7 months and then do it when prices come down, hopefully.
Look, there's a shortage just about in everything, and like I said, I think that's what has been behind. Well, I say been behind. It's been shortage driven, not truly inflationary driven. And again, we've talked about this over and over and over. But this recovery, if you will, it's on the back of the worst economic recovery. I know I've said that 1,000 times, but it's true, and I don't want to lose sight of that. I just want to drive that point that this so-called recovery is on the back of the worst economic recovery since the Great Depression, and then we have on top of that these higher commodity prices. And so it's not. I don't think that. My point is that these prices have not been in part because of the recovery, so to speak. It's the shortage, which is a burden. It's a tax. It's on the recovery. And so I think these higher commodity prices have been a bad thing, not a good thing. And so, yes, I think they, as Powell says, I think they were transitory, and I think that may be trying to turn here.
Now, the headlines are saying Dow tumbles as Fed says it's likely to raise rates sooner than expected. That's how we started off the show. How much of a hike do you think would happen? And does the Fed really control interest rates, or is it more of a global thing, and they just have to try to maybe keep the waves from being as high as they possibly could be, or as low?
Well, look, I know it's a bold statement, and some people may disagree with it, but they just don't know because they haven't looked. And it's kind of like what come first in one respect, what come first, the chicken or the egg. But bottom line, I've said this before as well, if you put short-term interest rates, like a T-bill rate, and a spreadsheet, and you look at the discount rate or the Fed funds rate, and you just compare the numbers, and I've done it going back to the 40s, the Fed doesn't lead, the Fed follows. That's a fact. People may not understand it, but it's a truth. And so, now, that said, can they come out and influence rates like they did here? Can they come out and make a statement and say, oh, we're going to raise rates and talk, jawbone and try to influence the market to put a little floor under rates right here? Well, sure they can. Absolutely. So, yes, they have influence in that respect, but how well does that influence work? And then ultimately, when the market is going to dictate if rates can continue lower here, I promise you they're not going to raise rates. So it truly is the marketplace that dictates the rates. But yes, they do have an influence. So it's kind of, that gray area, but like I said, ultimately when you look at it under the microscope, the market controls the rates, not the Fed. And you were talking about the market tumbling here. Something else I want to talk about, something else they're doing, I think, that a byproduct of is to try to also put a little bit of a floor under these rates, short-term rates, is the reverse repos. Have you heard anybody really talking about this reverse repo thing that's going on?
It's usually just you, Tim.
Well, I don't know what is up. I know that the banking, the behind the scenes so-called Eurodollar system, banking system is very complicated. I don't tend to by no means totally understand it, but I have people that I talk to that do, and something is up because you don't have a response like this for no reason. So let me give you some numbers. These repo operations and reverse repo operations are normal. That's what the Fed does. I say normal; they're somewhat normal. That's what they do. They provide liquidity and collateral to the system. Well, starting in January, the numbers started creeping up a little bit. It was the whole month of January. Now, let me clarify so that people understand. These by and large, these operations, they're short-term, overnight transactions, and some of them will be a couple of days, but by and large it's one day. But I want to look at them collectively for the month because it gives you a better picture of the escalation that's going on here. So anyway, in January, it totaled $18.3 billion for the month. February was 23.5, so not a big increase. March we jumped to $432 billion. In April we jumped to $1.4 trillion. So we were up, threefold or so, a little better. In May, we jumped to $5.5 trillion. And so far in June, we're at $6.7 trillion, and we have, I don't know, maybe 10 trading days left here. That's $6.7 trillion. It's been running the last week or so over $0.5 trillion. And then today, I checked the numbers before we came on, and it was, the reverse repo totals were $755 billion. So, $750 billion there. Knowing that these operations occur and have occurred in the past, it doesn't mean that, it's the end of the world, so to speak, that something is inevitable, but it means something is wrong. And we've never seen these operations like this. Back in the thing I find a little odd about this is maybe it's just because everybody's numb to it. But remember back in September of 19 when they came out and started, at that time it wasn't the reverse, it was the repo operations. They announced it and they said, well, we're going to do this for a couple of days. Okay, now we're going to do it for a couple of weeks, and then it just went on and on and on, and it just went right on into the top in 2020, and then everybody forgot about it. But it just kind of happened. Maybe that's why nobody's talking about it here. It's just so commonplace. But the point is that we've never seen anything to this magnitude, and I don't think they just do this if there's not a problem. So what I'm saying is that when you look under the hood here, this is an indication that something isn't right. And then you have, we're seeing a few asset classes like the crypto world cracking. We're starting to see a couple of, subsectors within the commodities like lumber. We're seeing it crack. Oil hasn't yet. Housing looks like it maybe has. You look at what's going on with gold today.
We'll have more with Tim Cyclesman Wood right after this.
Engineer Gold Mines is focused on the exploration and development of the historic high-grade Engineer Gold Mine situated 32 kilometers southwest of Atlin, British Columbia. Engineer Gold Mines is fully permitted for surface and underground exploration with the drill program now underway. Engineer Gold Mines Limited trades on the TSX Venture Exchange, symbol EAU. For more information, please visit us at engineergoldmines.com.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Tim Cyclesman Wood. Tim, gold took a major hit today. What's the story there?
Well, that's another indication, another asset class. Again, I've been looking for pretty much all asset classes to peak in close proximity. That's been the wording, and I think that's what we've seen. We've said that the 9-year cycle top in gold was in. I've said that I thought that the March low was an intermediate term low, and that this was a counter trend. And in fact, just recently we had a little short term low in gold that I've been following and talking about in the updates with people, that it couldn't even trigger a short-term buy signal coming out of that low, and I was warning about the structure, which gave us the setup for exactly what we're seeing today. As I'm looking at it now, well, I don't have it in front of me. A while ago, I think I saw where gold was down like $80 or something. And so I don't have, Wall Street Journal is showing down $80. Well, that structure fell in place. We've been talking about that in the short-term updates. The structure is key. And so it was there. We knew that the bounce in gold was counter-trend, and we got the setup with this, like I said, with this trading cycle advance over the last week or so. And then the other thing we talked about that is falling in place as all this is happening is the dollar. Remember back in January what we talked about, and into February or whenever, I know we've talked about it a couple of times, but that the dollar had made, I thought, an important low, maybe even the 4-year cycle low itself. And we had an intermediate degree decline into May, and now it's been off to the races. So look at the I guess the juncture that we're at, the technical juncture here. Gold selling off, Bitcoin, some of the lumber, housing, and yet the dollar is bottoming. We got the Fed coming out with their inflationary talk, but we got interest rates, still trying to break. They're down today. This is an important juncture. And then we have the repo operations going on behind the scene, and everybody thinks everything's peachy. And I don't think that's the case.
Our market historian Bob Hoy thinks markets will slop around over the summer, but he's pretty concerned about we'll see a major correction in September. Would that be your reading, or could it happen even sooner?
It could. My fear is it could happen even sooner, and I'm not making a prediction there. I'm telling you, we have to be aware of the risk. And for example, just like I told you whenever, or I say you, in our conversation, when we talked about, again, I can't remember if it was Bitcoin or lumber, but I threw it out there. I said, we'll watch it for fun. Maybe kind of fun to watch this thing set up. And I was smelling at the time it's setting up, and then all of a sudden, before we could talk about it again, it's broke. And so when you're dealing with these extended moves like this, they can set up so quick and it can break so fast. That's the risk. And so, once that, and I'm watching some stuff. If the structure falls in place here, I don't know if it's going to be a quick break or not with equities. If you look at different tops, like back in 2000, that was a kind of a slow grinding top. If you look at 87, obviously that was a quick one. If you look at 2007, that one was a little quicker. Look at 2020. So each one has its own personality based on that structure. But the thing is once we get that structure, just like with gold and lumber and Bitcoin, it can happen quick. So that's the risk. And I think that people don't understand, the environment. They look at everything, think everything's fine, and they don't see that risk. And so that's what makes it so dangerous.
Tim, for people who want to keep on top of stuff because it seems to be at a pretty important juncture, how can they get more information from you?
Well, I cover the latest in the research letters and the short-term updates. I have I think a pretty good update coming out. I say update, research letter coming out. The June letter's coming out this weekend, and I think there's some pretty revealing data in there. There's things that we've been watching. Again, the structure is key, but some pretty revealing statistics in there, I think. And then, of course, with the short-term updates covering things like gold and the break that we've seen here. So a subscription to the letter, and I encourage people to take a look at that. Cyclesman.com.
Tim, thank you so much for chatting with us.
Thank you.
My guest has been Tim Cyclesman Wood, editor of Cycles News and Views on cyclesman.com. If you have any questions for Tim or any of our other guests, you can send them to info@howestreet.com. Our YouTube channel is Talk Digital Network. Find us on Twitter @HowStreet. We're also on Facebook. I'm Jim Goddard. Thank you for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.